Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 for the trading session dated Wednesday 8th of January. I'm recording the video 4:25 p.m. Eastern Standard Time. New York's about to close and the market's just gone still. The daily chart level, our wave count remains exactly the same, and I'm expecting one more day of choppy, overlapping movement before this fourth wave correction is most likely over. And when that's done, I'll calculate a target for the final fifth wave up to end. At minor degree between waves 1, 2, 3, 4 and the upcoming fifth wave, it looks like we're seeing a larger fractal unfold of what happened here within minor wave 1. Here we had an extended first wave, a brief shallow second wave, a shorter third wave and a still shorter fifth wave. At minor degree here we have an extended first wave, a brief shallow second wave, a shorter third wave, a little fourth wave, and the fifth wave must be shorter. It cannot be longer than equality with the third wave because a core Elliott wave rule is a third wave may never be the shortest. If minor wave 4 ends after just one more day or session, then it will have lasted in total a Fibonacci 8 days. So that's my expectation. After tomorrow's analysis, I may be able to calculate a target up for the final fifth wave to end. I'm not going to calculate it for you at intermediate or primary degree because intermediate wave 5 has already passed equality with its first wave, and there's already a very, very close Fibonacci ratio between intermediate waves 3 and 1. It's my experience with the S&P that within its impulses, it will often exhibit a close ratio between two of the actionary waves and not so commonly between all three. I'm not calculating a target at primary degree either because primary wave C has already passed equality in length with primary wave A. The next target calculation would be 1.618, the length of A, which would see cycle wave B within this big expanded flat ridiculously long. So I'm not expecting to see a ratio between A and C, which for the S&P within its zigzags is actually reasonably common. When the final fifth wave arrives, if price moves above 1858.03, this main bearish wave count will swap over with my alternate bullish wave count, because above this price point, cycle wave B will be longer than the maximum common length of a B wave in relation to its A wave within a flat correction. The maximum common length is 138%, and when the B wave gets longer than that, the probability that a flat is unfolding must reduce. So above this price point, the two wave counts will swap over, but they will not diverge in their expectation of direction for quite some weeks yet. Let's have a look at how this fourth wave correction at minor degree is unfolding, where it begins here, this point here. It looks like it's unfolding as a double flat. The first structure in this double subdivides 3, 3, 5. This is an expanded flat correction. It's labelled minute wave W, the first structure in a double. The double is joined by 3 in the opposite direction, subdividing 3, 3, 5 with a slightly truncated fifth wave. This is a flat correction and it's labelled minute wave X. It's the 3 in the opposite direction joining the two structures of this double. Minute wave Y looks like it's beginning also as a flat. This subdivides down on the 5-minute chart as a 3, and here we have another 3, 3, and incomplete 5 up. At 1841, subminuet wave C would reach equality in length with subminuet wave A, and that would complete the B wave within the second flat. After that, I'd expect a 5-wave structure downwards for a C wave. If it ends about 1828, then minute wave Y will end about the same level as minute wave W, so that's my expectation. It may reach slightly lower down to the 0.236 Fibonacci ratio at 1825. The purpose of double flats is to take up time and move price sideways when the first flat correction did not last long enough. This one here, if minor 4 had been over here, would have been really brief. So this is the expectation for a second corrective structure. So I'm expecting more choppy, overlapping movement tomorrow with lower movement down to this target which may be reached tomorrow if minor wave 4 exhibits a Fibonacci time relationship lasting 8 days. Minor wave 4 may not move into minor wave 1 price territory. This wave count is invalidated with movement below 1811.22. At the daily chart level, this is the bullish alternate. It does not diverge at all, and it won't for quite some time. Still need a fourth wave correction to end, and then we'll have a target up for the final fifth wave, and at that point both our wave counts will expect a sizable trend change. The main wave count, the bearish wave count, will expect a huge trend change at cycle degree, and this bullish alternate will expect a reasonably sized trend change at intermediate degree. Intermediate wave 2 should break through the lower edge of the channel containing intermediate wave 1, so downwards movement at least below this blue trend line. I'm expecting one more day of choppy, overlapping movement to complete what looks like a double flat correction for this fourth wave. When that's done, I'll be calculating a target upwards for you for that final fifth wave. That's all today for me with your S&P analysis, and I hope that all our members are having a most awesome day.